Imagine standing on the edge of a revolution. The train is at the station, crowds gather, anticipation crackles in the air. This isn't just another day, this is the dawn of a new financial era. Bitcoin is that train. A breakthrough technology, ready to transform how the world moves value. Open, unstoppable, and global. The world is watching. Some hesitate, afraid they're too late, but the truth? The journey is just beginning. The doors are open, the tracks are being laid. Billions still have a chance to get on board. Don't look back. The future is being written now. Will you take your seat before the train leaves? At its heart, Bitcoin is a revolutionary new form of money, a digital asset that's reshaping the financial landscape. It's designed to be a decentralized currency, free from the control of governments and traditional financial institutions. Purely digital, existing only as computer code. It's a string of numbers and letters, an encrypted piece of data. You can't hold a Bitcoin in your hand, just as you can't hold an email or a digital photograph. It's not a physical object. It lives on the internet, a network that spans the globe, secured by a global network of computers, all working together to verify and validate transactions. This distributed network is what makes Bitcoin so resilient. Think of it as digital cash, a peer-to-peer electronic cash system. You can send value directly to anyone, anywhere in the world, instantly and borderlessly, without a bank or any other intermediary taking a cut or controlling the flow. The magic behind it all is the blockchain, the technology that underpins Bitcoin. A giant public ledger, a shared record of every single Bitcoin transaction, open for all to see and verify. Every transaction is recorded on this blockchain, permanently and immutably, and thousands of copies exist worldwide, ensuring that no single entity can tamper with the data. This is decentralization in action, a key principle of Bitcoin. No single person, company, or government controls it, making it resistant to censorship and manipulation. Bitcoin replaces trust in traditional financial institutions, which have historically controlled our money, with trust in mathematics and open-source code which anyone can inspect and verify. The rules of Bitcoin are transparent and predictable and enforced by cryptography, complex mathematical algorithms, ensuring authenticity, preventing fraud, and maintaining the security of the network. When you own Bitcoin, you're not just holding a digital asset, you own a secret key, a unique piece of code, a digital proof of ownership stored in a wallet, either on your computer, phone, or a hardware device. As long as you control your key and keep it safe, you control your funds without needing permission from anyone else. This gives you true sovereignty over your money, putting you in control of your financial destiny. It's a shift from asking permission to use your own money to having absolute freedom to use your money as you see fit, without censorship or restrictions. Bitcoin is open, meaning anyone can participate, secure, protected by advanced cryptography, and accessible to anyone with an internet connection, regardless of their location or background. It's a fundamental change in the way we interact with money, in how we think about and use money, offering a new paradigm for financial freedom and inclusion. That's the power of Bitcoin in our digital world, a truly revolutionary technology with the potential to transform the global economy. One of Bitcoin's defining features, and perhaps its most revolutionary aspect, is its absolute scarcity. This inherent limitation sets it apart from traditional financial systems. Only 21 million Bitcoin will ever exist. This number isn't arbitrary, it's a fundamental rule of the Bitcoin network. This limit is hard-coded and unchangeable. It's embedded within the very fabric of the blockchain, making it impervious to manipulation or alteration. Unlike dollars or euros, which can be printed endlessly by central banks at will, often devaluing the currency in circulation, Bitcoin's supply is fixed, offering a stark contrast to the inflationary nature of fiat currencies. This scarcity is what makes it a potential store of value, a digital asset that can hold its purchasing power over time. Like digital gold, a finite resource in a world of ever-expanding monetary supply. Fiat currencies lose value over time due to inflation, their purchasing power diminishes as more money is introduced into the economy. Bitcoin is designed to resist this, offering a potential shield against the erosion of wealth caused by inflationary policies. As more people understand its limited supply and the implications of this scarcity, demand for a piece of the 21 million grows, driving its value proposition. When demand rises and supply is fixed, price tends to increase over time, reflecting the fundamental economic principles of supply and demand. Each Bitcoin is a share in a global monetary network, a decentralized system operating beyond the control of any single entity. As adoption grows and more individuals and institutions embrace Bitcoin, each share becomes more valuable, reflecting the network's increasing utility and security. That's why many hold Bitcoin as long-term savings, viewing it as a responsible way to preserve their wealth for the future, a hedge against inflation and the potential devaluation of traditional currencies. It's not about quick gains or speculative trading, but about preserving value in a digital age, safeguarding your financial future in an increasingly uncertain world. Bitcoin's scarcity is its foundation for long-term potential, providing a solid base for a new era of digital finance. Bitcoin's design includes a unique mechanism, the halving. Roughly every 4 years, the number of new Bitcoin created is cut in half. This predictable event reduces the rate of new supply, creating a supply shock. Historically, halvings have preceded major price increases as demand chases fewer new coins. Bitcoin is the first asset with a perfectly predictable disinflationary monetary policy. We know exactly how many Bitcoin exist now and in the future. This stands in stark contrast to central banks whose policies can change overnight. Each halving cycle brings more attention and strengthens Bitcoin's role as a scarce digital asset. We're still early in this multi-decade process. Bitcoin was once the domain of early adopters and technologists. Now, major institutions, pension funds, asset managers, corporations, are investing. The approval of Bitcoin ETFs has created a regulated bridge for institutional capital. These investors bring stability and legitimacy with a long-term perspective. Their involvement signals that Bitcoin is maturing into a recognized store of value. For new investors, this is a powerful sign. The smart money sees a future here. Institutional adoption doesn't remove risk, but it changes the opportunity. Bitcoin's integration into mainstream finance is just beginning. Bitcoin's resilience is legendary. Since 2009, it's survived price crashes, regulatory crackdowns, and the collapse of major exchanges. Yet the network has never been hacked, never gone offline, and never failed to process transactions. Its decentralized design means no single point of failure, no CEO, no headquarters. Each challenge has made it stronger, not weaker. After every major price drop, Bitcoin has recovered and reached new highs. This pattern of bouncing back has built a foundation of trust and confidence. You're not investing in a fragile idea, but in a technology battle-tested for over a decade. Volatility is part of the process for a new global asset. The long-term trend is growth and adoption. Bitcoin's durability is unmatched in the digital world. Its unbreakable spirit is its greatest strength. Price grabs headlines, but it's not the only measure of Bitcoin's success. Look at the fundamentals: active wallets, network hash rate, and transaction volume. The hash rate, a measure of network security, has grown exponentially, showing global investment in the system. More active wallets mean more people and businesses are using Bitcoin. This grassroots adoption is what truly matters. As the network grows, it becomes more valuable for everyone. When price dips, remember the underlying trends: stronger infrastructure, expanding user base, and rising security. The real opportunity is in the network's growth, not just the price. You're buying a stake in a global, decentralized financial system. Buying Bitcoin is easier than ever, but start small and focus on learning. Never invest more than you can afford to lose. Use a reputable exchange to make your first purchase. Think of it as paying for your education. You don't need to buy a whole Bitcoin. Fractions are possible. Learn about self-custody. Move your Bitcoin to a personal wallet for true control. Hardware wallets are a secure option for beginners. Commit to continuous learning. Read, listen, and follow trusted sources. Avoid promises of guaranteed returns or secret strategies. Scams are common. Knowledge is your greatest asset. Take a measured, security-focused approach to benefit from Bitcoin's long-term potential. Bitcoin is more than a trend. It's a technological innovation reshaping money and trust. It offers an alternative to a financial system that often excludes and inflates. Built on open-source code and mathematical certainty, Bitcoin simply executes its rules. The journey will have volatility, but the principles of decentralization and scarcity endure. As the world digitizes, the need for a global, censorship-resistant currency grows. Bitcoin is the leading candidate for this role, forming a new layer for transmitting value online. Feeling late is a misconception. We're still early in a multi-decade transformation. The most important investment is in your understanding. Educate yourself, verify, and explore the principles behind Bitcoin. The future of money is being written now, and you can be part of it.